So we're looking at the trade taking on Gbpjpy. So as always, we start with the overall time frame, 7th of August. So on the daily time frame, we can see that we are in an uptrend. We are bullish. So the market is in a bullish momentum. We can see it on the 4-hour time frame as well. We're still maintaining that same bullish pattern to the upside. So the market is rallying to the upside. So I've already marked out my zones, but I'll make it clearer when we move to the lower time frame. Okay, so let me just clear these ones out. So you can see bullish candles to the upside, pushing the market upwards, and then we can see a short-term sell to the downside, tapping into this bullish area. So on the lower time frame, the 1-hour time frame now, we can see like it's a downtrend, a trend in a trend. So we can see a downtrend within the uptrending market. So we can see highs, we can see low, we can see a lower high and a lower low. The market's moving to the downside. So we'll mark that out. And then the area from where price reacted, we also mark that out as well. So price created a support at this area and also reacted from the same zone, the same area as well, which is around the 180,600. So let's just put our line at this 180,600 area. So on the 30 minutes, focus more now on the candles. So what we can see with the candles is that price created a supply to the downside. So I'll draw this out really. So we can see from here, you can see a low, you can see a lower high, and then price failed to create a lower low. From this zone that has been selling to the downside, price failed to create a lower low, created a double bottom pattern, and then we can see the market breaks from this high here, breaks and creates a higher high and a higher low, which this low is a support from this resistance area, pushing price to the upside. So we can from this see that this is a valid support zone with the double top pattern that has been formed. So we can clear it out with the double bottom pattern that has been formed. So we clear it out now. We can see that price has reacted from this area, broken out from this resistance zone, created a support at the previous resistance, and now is pushing to the upside. We can see price seeking liquidity. These weeks are going to be filled because these weeks are validation that there is supply at higher points. So whenever we see wicks that send to the upside, is validation that there is liquidity at a higher level. When there are wicks to the downside, it means that there is demand at a lower price point. So these wicks are validation that okay, price is going to continue to the upside. When we start seeing momentum moving to the upside, and we are seeing wicks that have touched the upside and are reacting towards a previous support or demand zone, we can now validate our entry that okay, since there's now momentum, since there's volume pushing price, this volume is going to fill those wicks and tap into that supply zone at the higher price point. Like I said before, price delivery is the delivery of price from a point A to a designated point B. According to IPDA, in the interbank price delivery algorithm, these interbanks, they take trades at price points that will help them to make profits, that will give them the best returns. So when the market is in an uptrend, what we are looking to see is okay, where is the next supply zone? Because most of the time, that is where the market is going to go to tap into, get liquidity in order to push price further, because power always goes to the premise with greater pressure. So wherever there is greater pressure, the market will always target that area, tap into that area in order to push the market further, because the market cannot be stagnant. The market must always move. So price will always go to the point where there is the highest amount of liquidity in order to continue pushing price further. That is why there will be resistance zones, and those resistance zones will be violated, and price will continue moving to an area where there is a higher amount of liquidity at a supply, at a higher supply zone. So when price taps into that supply zone, it will now start moving to the downside in order to fill in orders at the demand zones. So it's from supply to demand zones, depending on the area that has the highest amount of liquidity. So the market will only go to the area with the highest amount of liquidity. And I like to liken the movement of the market as a track record of a delivery man. Yeah. So I like to say that, to make it very simple, when a delivery man is on the go, right, taking price, for example, for those of us that stay in Lagos, let's say the delivery man is taking a particular product. He has a delivery to do from the mainland to the island, right? So let's say he's moving from somewhere like Mushin to Victoria Island. Obviously, when the delivery man is moving from Mushin to Victoria Island, right, and somebody that is still on the mainland, let's say, for example, somebody that is at Gbpjpy places an order to be delivered, right, compared to somebody who is already on the island, right? The person at Gbpjpy who is still on the mainland is more likely to have his order picked up to deliver than somebody who is already on the island, right? So that is the same thing with price. So price goes to the premise with greater pressure, because price is always trying to tap into the area where it can easily catch liquidity and then keep on moving. And that's the same thing that happens with the market. Price is always tapping into the area where there is liquidity available at that point in order to push price further. The only goal of the market is to push price further. So whether be it support zone, resistance zone, they can easily be violated as long as there's greater pressure. There's a greater demand or supply that is being requested in order to push price further. So I hope that will be, but I'll explain it better in further videos. But in this video, I just want to make it clear that it's just a supply and demand. It's an auction, a supply and demand auction. So the price zones with greater liquidity will always be tapped into first before the price zones with lower liquidity. So let's look at how this reacted. So now we're in a buy market, right? So we are looking for only buy trades. Also, as a beginner, if you see an uptrend in majority of the time frames, for example, you see an uptrend on the 4 hour, you see an uptrend on the 1 hour, you see an uptrend, just maintain that sentiment and only take buys. There's no need to take sell when you see uptrend in multiple time frames. What you should be looking for is, okay, where is the area where price will break structure in order for me to enter to the upside? And that is what we are seeing here. So price had a short-term sell to the downside within the overall market, within the overall bullish market, right? And now price is breaking structure to the upside from this area that we can see here. So from this zone, price broke the resistance and came back and created the support around this area. So this area already can be marked out as an area where we can set our stops, because this is an area that has been created as a support zone. So this is a new price level where orders are being taken, where orders are being filled, where market orders are being executed, right? So if we put our stops below this level, we have a good stop loss for us to now take to decide what risk to reward we are going to set to the upside. So like I said, now price will tap into every order that is required to push price to the next supply zone, right? So this is a valid supply zone because this is an area where price reacted where price created um a sell to the downside and broke structure, broke this previous demand, right? So this is a swing to the downside, and then price reacted from this zone where we have marked out this demand zone, created a double bottom, and now is breaking structure to the upside, violated this supply zone, created a support at this area. And I want it to be very clear because most of my trades come out like this. It's always an overall trend, a temporary trend reversal, which is not really a change of trend. It's just a temporary trend reversal. And then there's a break of structure back to the overall trend that we are already trading. And then from that break of structure, we look for our entries with the candlestick patterns after like um coming up with our confluences that okay, every confluence that we have is in favor of this trade, then we'll take our entry. For example, this 30-minute time frame, we can see this is a spinning top, and this spinning top is a continuation pattern for the already existing trend. And we can see the previous candles have been bullish candles in an overall bullish trend. So that already tells us that the market is looking to go to the upside. We can see that there's liquidity in all these areas. And the next level that has not been tapped into is this level right here. This is a previous support zone where market broke structure. We can select this zone as our take profit because the market is always likely to react from that area, which was the previous support zone, and react to it and create a resistance. If the trend of the market, if there's a lot of momentum and volume in the market can continue on its overall trend. If there isn't, market can retrace, reverse, and move to the opposite direction. So that will be our next take profit. So now let's put our entry. So we'll put our entry at the spinning top candle. Put our stops at the previous low. And then I'll take profits at this previous support area. And then the price. So the price hit our TP. We want to 2.97, which is approximately 1 to 3. So that is our take profits. You can see that price continued to the upside, but reacted at that previous support zone. You can see this candle. You can see this candle here is a reaction on the 30-minute time frame. You can see the reaction more clearly. Yeah, so that was the trade that was taken on the 7th of August. So it was taken during London session. So yeah, so that's GG guys.